All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for October 20th, 2025. We are recording this at 4 p.m. Eastern Time, and this is the 499th episode of Crowd Forecast News. So will be a solo market outlook episode with Jim, the option professor of optionprofessor.com. So I'm going to turn it over to him.
Okay. Hey, thanks, David. And welcome, everybody. Good to be with you and good to have a solo place here so I can go over all the information that I'd like you to know about. Quick background for the guys who don't know who I am. I'm Jim, the option professor. I'm a graduate of Boston College, and I went to the Options Institute for Advanced Option Training. I have been doing options for many decades, and I specialized in it as a career. And I also have done hundreds upon hundreds of seminars on options to thousands of investors, not only nationwide, but in Canada, and also have traded thousands of contracts of myself. So what this all adds up to is I'm qualified to explain options to you, and that's exactly what I'm going to be doing here today. Okay, so let's get into it here. We've had a great run of 4 months. Now it's into our fifth month ever since May when we turned up. And this has been a great time to be involved in many of the options markets out there. So let's take a look at the S&P 500 and see what's cooking. Again, this is all the stuff that I use. And so I'm trying to tell you this thing's been in an obvious uptrend for a very long time. And it had tests. This called reversion to the mean back in July. Couple of reversions in August, September, off to the races. Just recently, as you probably knew from last week, we had another reversion, and that reversion held up, and now we're off to the races again. So that RSI doesn't look bad. It looks like it wants to blow out the highs. We'll have to see. Again, there's a lot of stuff hitting the fan here. We have got Tesla, and we have got Netflix coming up this week for earnings. But next week is really where it could get wild. And why is that? Because you got the Mag 7 announcing their earnings. If they come in and announce big free cash flows as usual, if they keep coming out with how much they're going to spend on AI, and the Fed cuts, and Trump gets along with Xi, I mean, you can't get a perfect storm to blow up and melt to the upside. So, what am I saying? Let's take a look at the VIX and see if that's giving us a hint. VIX. That's the volatility index. It's been very good to me. Why is that? Because when it spiked up there during the Trump crazy campaign where he almost tanked the markets by talking about 300% tariffs and then backed off to 10%, obviously that's a little bit of a policy change. This RSI, excuse me, this VIX has been coming down ever since May, and it's been quieting down. Sure, we had a couple of bounces, but they were like very short-lived. And we just had another big bounce. And again, that seems to have been short lived. So right now it's back underneath the red line, which is 19. The longer it can keep under 19, and certainly if it can get back under 16, we were going to be in great shape for a melt up. So I would be very watching that if I were you. Conversely, if this is going to be turnaround Tuesday tomorrow for some reason, you're going to be looking at a VIX that can't get in under 16. And if it starts getting back above 19 and 20 and 21 for sure, you'd be looking at a situation where that spike could come up and this little rally, this little breakout it looks like it's having could fall apart. So I think the VIX will tell you the story. Obviously, you can't fight the tape. 11% drop in the VIX is very powerful, and a 75-point move on the S&P is very powerful. And with the news that could be quite positive looking forward, it is very tough to stand in front of this. And again, people do not care about valuations. They do not care about 2000 and the dot-com bubble. What they care about is this stuff is going up. There's a ton of money going into this AI. The Fed is very easy or supposed to be easy. We'll see about that. But it is certainly a backdrop to where businesses could really beat on their earnings in Q3 on top of beating on Q4, 2, on top of beating on Q1. I mean, this thing's got momentum to spare. Now, like I say, is it extended? You don't have to be a genius to figure that out. This is a 20-year graph, and you're up here at 6,800, and the moving averages are down here at 5,000, right? Of course, it's overdone, but that doesn't mean it has to go down now. So remember that. That's the difference, right? Okay, so you got my idea on what's going on with the S&P and how to watch the VIX. Okay, this is the other one that has been really going well. I'll make an easier one for you here. This is one I've been talking about on my alerts. I get the alerts out every Sunday night, and I was telling people that this thing had not made a new high since 2022. And obviously, once it turned up here, the money is going into small caps, and this could be a big outperformer versus the QQQ in 2026. So keep an eye on this because, again, it does have some momentum to it now ever since it got above 200. That's why I told people 200 is your floor, and 215 and 235 right there is your support. So you know where your supports are: 225, 215, and then, of course, down there at 200 where I just showed you. Keep an eye on the Russell. If they start cutting rates aggressively, that could be a beneficiary. Okay, so we've got that going on right now. Everybody wants to know about gold. So let's talk about gold. Gold is extremely overbought, but that doesn't matter because something's going on beyond normality here. And what is it? It's called scarcity. And that's why NVIDIA goes up all the time and the Mag 7 go up all the time, this and that, because these are not replicable as far as there's not 9 million NVIDIAs, 9 million Amazons, 9 million Microsofts out there. They're very unique and people pay for unique. Gold, there's only so much of it, and there is a debasement out there. People can see we're getting wild with our deficits. We're getting wild with our debts out there, national debt. The currencies are looking wild. France looks like a mess. So again, people are starting to say, I want the gold in my portfolio. And again, there's only so much of it. The ETF inflows have been tremendous as households are starting to increase their stake. And the central banks have an insatiable appetite. And you've also got a situation where the shorts that are in there are constantly getting blown out, right? So you've got a lot of money coming in here, and there's not an unlimited amount of gold. And so again, this is overbought, this is overdone. If you're in there, enjoy the ride. If you want to start getting in there now, probably not a good idea. Okay, so that's the story on gold, pretty much the same on silver. With regards to the interest rates, everybody in the continent thinks rates are going down next year for sure. And of course, that's why they think that, because look at the chart on the 1 year basis. It continues to decelerate. And again, on a 5 year basis, this is the yield on the 10-year note. That's decelerating, and it looks like it wants to drop to 340, right? And that's exactly what it might do. But here's the thing. If it doesn't do that, it's going to be because something happened with inflation and we get a CPI number on Friday. I don't know about you guys. I see inflation way higher than people are talking about, and I see inflation picking up. Those insurance costs are going to be up double digit to people. That's inflationary. So again, if that is the case, and we do not break down to 350 or 3%, like this chart would tell you, and there's no inversion to the downside yet. And if this thing starts breaking above my red line, which is at 427, so if you saw a 430 and then a 450 10-year note, everything has gone awry, and that could change things dramatically. So keep an eye on the 10-year note. If we take out 388, that's April's low. If we take out 360, that's last year's low, and this thing is probably falling under its own weight. Okay. But since the entire planet is positioned for that, keep an eye on the contrarian trade because there could be a lot of money made on the contrarian trade if it breaks above 427. Okay. So take an eye on that. US dollar. US dollar, as I said, has major support in the 96, double low there, and 98. So that's your box. That's your box. And from there, it may be able to go up towards 104 if it can get through this blue line. Also on the 1 year, you can see it. That's where the 102 comes in. So it's holding down here at 98, the next level down here at 96. And if it takes out this area here about 100, it could keep going up. Okay. And the whole world is positioned short on this too. Can you see that? But if there's going to be a currency crisis, and you know what, when your deficits run amok and the government is in, has a balance sheet that looks like garbage, then people start getting into metals, they get into other things, stocks, And if they abandon the dollar for whatever reason, it'll be because it broke 96. And if it breaks 96, the ride down can be fast and furious all the way down to 90. So be careful here because it is pretty binary in my view. It's either going to go up to the 102, 104 neighborhood, or it's going to give it up and go into the abyss. Right now, it does look like it wants to go to the upside. But keep an eye on that because the debasement trade is no joke. There's your gold. Now let's look at a couple of globals real quick, because I look at everything. I try to make money wherever I can. In Europe, they are a little stalled out. This is the European banks. And of course they're extended, but they're stalled out a little bit, as you can see, right? European banks stalled. And if they break this level here, it could really go down towards here. So if there's a problem with European banks, this thing is going down. Now, Europe, their big country over there, of course, is Germany. And Germany's hanging in there pretty good. It looks like it's also binary, going to be breaking out towards 44, or it will join the banks and have a correction. So keep an eye on Europe because it looks like it's on the ledge. The couple of them that are doing quite well is Japan. As you can see, that's breaking out to the upside and it's been pretty darn good the whole time. And the other one is things like China, Alibaba did very well with this. As you can see, what a great run that was. Reversion to the mean, could have taken another shot at it here, and now it's back on the bicycle. And the other one is Baidu, another one that was on the alerts that I send out every Sunday night. It was on the alerts down here at 100. Obviously, that was a great run. And then it had its reversion. This could also be an interesting time to take a shot at it again, too. Again, I like to do two things. Try to get involved in a breakout or to get involved after we've had a reversion to the mean. Don't forget, call buyers are getting wiped out here, right? So that means they're cheaper and the trend looks like it's still up and the RSI is doing pretty good. And the people who are selling calls in a flat market in a country where people like David Tepper and very big investors are taking a shot, they need their head examined because you're going to get a low premium. And then when it goes through the roof, you're going to have to really get wiped out if you don't cover. So the bottom line is selling calls into the flatness, right? Doesn't make so much sense. Buying calls into a huge advance doesn't make much sense. And then selling the calls after they've had a reversion doesn't make too much sense. And if you're doing something that doesn't make too much sense, sometimes that costs money. Okay, so there you go with the international picture. And then let me get a couple of other things here, get the house cleaning done. We've got crude oil, obviously under pressure. If you look at the 1-year graph, it tried to get above the gold line here, couldn't do it, and gave up the boat. Supply concerns, too much. And then this thing looks like it could go into the abyss at any point, or it could hold this 55 area, which is so far has done. If it takes out this right here, going down to 50 or 45 or wherever it wants to go is not out of the question. Because if you look at the long-term graph, you can see it's trying to hold on for dear life. That purple line comes in at 63. What does it come in? No. The purple line, yeah, comes in at around 63. So if you could get above 63 again, then this stuff underneath was just nonsense. But can you see if we break under 53 or what is that? What's that number? 55? If we break under 55, can you see what kind of an acceleration to the downside could occur? So this is very critical. And if they want to cause a lot of havoc with oil, you break 53, 55, and you bring it down to 30, that'll change things dramatically. So oil is very, very on the edge here, and it's on the ledge. If this thing gets starts taking out 55 with size, I mean, it could go. There's nothing underneath it. There's nothing underneath it. Okay, so there you go with that. Now let's go to that Bitcoin. Hey now. Bitcoin is, well, I always use the 5-year graph. That'd be the weekly. Okay, why do I do that? Because it's a great chart. Why is that? Because here it told us that well, first of all, started here in 23, it turned up. Then it came back and tested, buy some more. Then had a big rally, came back down, went underneath the line here, but the blue never turned down. So that told me that this was all baloney. All of these little closes, all that stuff it was doing, because the trend was still up. That means they were just, weak hands just getting out emergency wise. Once it got back above blue, off to the races. Come back down again. The traders, they like to take it underneath support levels, then bring it the other way, right? So this is another example at around 80 grand that we thought, and of course, these were former highs, and there was a gap there. So that's why we thought it was the ending there. I said this right on my report, and then back on the bicycle, right? Okay. So then we have a big run up, and we take out the high up here, and then we come back down. Look where it stopped. So that's where it's got to stop. It takes out 104, you got big trouble, right? Takes out 104, 103, whatever. There's nothing underneath it, right? And of course, if we get above this number here, which is 115, I think you got a shot at getting those crazy numbers that Tom Lee's talking about on TV. So you're right in it right here. It's very interesting. Look where the RSI is, right where it would explode from. So do I think it can go to 200 grand like Tom Lee's talking about? It can go anywhere it wants. I do know one thing. It ain't going to know 200 grand unless you break above 115. And if it's got a whole 104. So what a great time to look at it here. Because again, it could be very, very exciting. 8 weeks, that's all that's left in the rest of the year. And it could be the wildest 8 weeks we've seen in a long time. Okay. What else do we got here on Bitcoin? You know, some of the stocks that I've had on the list that have done very well in it are Hut. Look at that. Not bad. How about this one here? You probably never heard of it. That's why when you get the alerts, you'll hear about stocks maybe you're not following, like this one, where we were in here down in this neighborhood and then it went to that neighborhood. And then, of course, what else? Lately, this one's breaking out and it hadn't been that expensive. So you've been able to get in here at a reasonable price. And who knows? Is this thing going to go nuts too? It could very well do it. Another one that was kind of cheap that we got into recently, because, you know, obviously those other ones are already flown, was Riot as it broke above 15 bucks. So that looks like it could go someplace crazy too. And then, of course, the one we've been focused on with Ethereum is Tom Lee and Peter Thiel's deal over there at Bitmine Immersion. You look at the 1 year graph, you can see it's hanging in there. So do I think it could take out the 70 over time? You know, you can buy long-term vertical spreads on this stuff. You can go out to 2027, sit there like Buddha and say, I'm going to be in this thing for a year because this is an emerging technology, an emerging situation with stable coins and blockchain. So you can take long-term verticals. If you don't know what that means, that's one of the reasons people subscribe to my letter, because it comes with my cell phone and we can talk like we're talking now about any questions you might have and any further explanations you might need. So that's an exciting area, right, as well. And then again, what you might want to look at also is MicroStrategy. Now, why is that? Because that thing is a dog lately. Why is it a dog? It used to be great. Let me show you the 5 year graph I used on that. Okay. It breaks out here. Great time. Comes back and reverts. Great time. Goes through the roof. Ridiculous. The premium on it, meaning the price of the stock over what they actually own in Bitcoin, was off the charts. And there comes the shorters like Jim Chanos shorting MicroStrategy and buying Bitcoin. That's called a spread. And what are they doing? They're looking for the premium on MicroStrategy to dissipate and the price of Bitcoin to go up. You don't think that was a good trade? Freaking great trade. But maybe that premium has gotten back in line now, and maybe this thing could get going again. And that's why it's stalled out here at the 200 and what was the low here? About 279. So 280 is your line in the sand. You don't want to take it out of there. I don't like the trend right now, but if it got above 350, this is the kind of thing. If Bitcoin goes to 200 grand or 180 grand or something, I would imagine even without a premium, this thing could go up. So keep an eye on this a little bit, but there's a reason why it's tanking, and there's other ways to play it that doesn't have that premium situation that you're dealing with. That's another reason why Bitmine has had some problems, because they're trading at a premium over Ethereum, but not excessive like this one was. So that's your story on that. Again, you know, there's other ways to play this thing besides that as well. So that's pretty much the crypto area. And that pretty much runs down most of the markets. I follow them every week. So I give you an update of what I'm seeing every week in a synopsis, which is pretty good because it's hard to keep up with all these news. You know, like today we have Apple coming out and their new phone is sales are picking up quite a bit. And so basically you can see Apple's taking off. But if you look at the 1 year graph, that was pretty obvious because it reverted to the mean and it's been taking off from there. So if you wanted to buy calls on it, obviously 245 was a good place to take a shot. And it looks like it wants to go someplace. It looks pretty good. And again, I think it's into all high, yeah, it's into all-time high territory. Another one is AMD had a pretty good day today. And that again is also again had well, it broke out over here in April, had a reversion to the mean kind of thing over here, and then from 150 to 240 was pretty fast once they got those agreements going. Um, there were some other stocks that had a pretty good time here today that have to do with biotech. Let me show you a couple of things that have been recently on the report here. We had Alcoa aluminum because, again, to me, that looked like it might go someplace. And you see how it's breaking out here? Okay. And then if you look at the 5 year graph, it gives you an idea of how much it could go if it really wanted to take off. So that's what makes this interesting. Not only on the short term is it breaking out, but if it gets above yellow here at $40, it's got a lot of place to go. So it'll be interesting to see about that one. Same thing with FORM, form factor. Again, if you look at the 1 year graph, it had a reversion to the mean, so it looks like it's going to go up. RSI looks pretty good. But if you look at the 5 year graph, you can see it's got plenty of real estate to make up if it wants to. Those are the ones I'm kind of looking at because of the fact that they've got ground to make up. Let's take a look also at some of these and these are all been on the these have been on the report. So here's one TXG. If you look at the 1 year graph, it looks like it's breaking out. And then basically, if you look at the 5 year graph, you can see there's real estate that it could make up. Another one is Twist. These are in the biotech neighborhood. And as you can see from Twist on the 1 year graph, it looks like it's trying to break out here a little bit. And again, it has some room to go if it wanted to really make a spiking up move. Another one that's been around for a while, CRSP. So that's what I'm kind of looking for. I'm trying to look for some things that, are breaking out a little bit here, And if you look at the 5 year graph, you can see, you know what? They could have some runway still to go. So the biotech is a pretty exciting region right now, and that's why I'm taking a look at it. This one here is another one that I've owned for a long time, and you can see it had a pretty good day today, and it looks like it's going to go someplace. So these are all, like I say, in that same genre a little bit. Another one that broke out today I wanted to show you is one that is a primarily big owner of Bill Gates. That can't be a terrible thing. And this is something that is breaking out to the upside. It's been on the list as well. And you can see here, it's got some room to go. But more importantly, on the 5 year graph, it still could go quite a bit more. But, even up here, from here to here, is not a bad spike if it happens. And they're in healthcare software. So, and then I guess 2 weeks ago, we put this guy up there, and that's SoFi. And as you can see, I saw it all reversing here. And I said, what's the probability that we're going down to 22 versus going up with the red line turning up against blue? So it wouldn't surprise me if this thing spiked up and gave you a pretty good spike. And the options were very cheap when it was down around $26. So I thought this was kind of interesting too. It's a fintech deal. So not only do they do banking, but they've got the fintech stuff going as well. So that gives you a little bit of an idea of some of the things that I'm looking at because in the buying of options, you got to try to buy them at the right time when the options are cheap and the seller's making a big mistake. That's basically what we're trying to do. Where's the seller making a big mistake, and where can I make a big hit because he's making that big mistake? I'll give you some examples of ones we've had this year that the seller made a big mistake. And when they do, you can make quite a bit of money. That's Rigetti Computer. Also had a reversion back to the mean a little bit. So we'll have to see how it does. But certainly getting involved when we did in the 10 to 15 range wasn't such a bad idea. Applied Digital was on the sheets a long time, and they were in there from $6 all the way to about 10. And obviously that's had a very big run as well. So there's been quite a number of them that have had nice runs. Another one that was really, it's like you're buying this because it's not going to go out of business was Open Door. And Open Door gave you a little hint that it was moving up at 50 cents. And then it gave you another hint it was moving up at $2. And then once it got going over there, boom, 11. Now, some of these options were as little as like $80 to get the $2 calls going out to November 21st. They haven't even expired yet. And of course, you had your run, so you got to grab your money. And so basically, it's had a pullback now, but it certainly had a big run before that happened. And then I showed you Iran, the one, and then another one was Roblox was good for quite a long time as well. The beautiful thing about getting the alerts is you're also going to hear about stocks that you're not watching, which then puts it on your radar, which means you could use your own strategies, your own ideas, but you're now aware of it because, Roblox turned up here and maybe you weren't aware of it because you don't have a 5-year-old who's using it all the time, right? And so basically it's running and running and running without you because it was never put on your radar. So one of the beautiful things about getting my alert is that you're going to hear about companies you're not following. And I think that's obviously a big deal. I'm going to change screens here to give you a little bit of an idea. And again, our what do you call it? Our special offer includes a 30-day trial to Stockwatch Weekly, which uses advanced algorithms to pick their stocks. So that's a 30-day trial for free, which is high value. Now, again, here are some of the alerts and when they were on there. And they always come out Sunday night. I send them out Sunday. No, I don't, but I put them up together Sunday night, and then Daniel sends them out. Anyway, on August 24th, the idea was Baidu. October 17th expiration, $100 call, $75 put for 225. The stock went up to 138. In fact, it went all the way to 150 because it only expired yesterday or Friday, and it was in the money by 3,800 bucks from top to bottom. What that means is your 255 obviously doubled at one point, tripled at one point, quadrupled at one point. You had all kinds of opportunities to take some profit because the entirety of the ride was $5,000 before it expired. Same thing with Cloudflare and Google. These won the alert in August. I've got newer ones, but I'm not going to update this thing every 2 minutes. And they don't all work this way. So obviously you have to use money management. You have to cut and run the ones that don't move, and you got to figure out a way to let the other ones run. So that's some of the things we talk about, during coaching sessions and things like that. Try to help you with those kind of things. But you see all these names, right? Robinhood. Wouldn't it be nice to be talking about Robinhood in April when it was at 60 and staying with it? Wouldn't it have been nice to talk about something like a firm at 57 and it goes up to the 80s? A Cameco in the 60s went up into the 90s. So there's been this thing here. Iran is you just saw it is like $50 or something, and we started at 8. QB Quantum, $12 went way up. So we also had D-Wave and a bunch of other ones there. So there's been a lot of stocks that have been brought to your attention, even inexpensive strangles. 85 bucks, 134 bucks, 164. This is a deal where we're trying to risk a low amount of money and catch a ride. And if we catch a ride, we can get paid. And if we don't catch a ride, you can either sell it out and try to get some of that premium back, or the worst it could ever get is the premium. And if you're doing day trading on the S&P, I'm sure every once in a while, you catch these big rides. But you know what? If you get an unexpected gap down, it can be a problem because, you're not dealing in limited risk when you're dealing in the futures. Yes, you have a stop loss in there. I was talking to somebody today who didn't understand a stop loss is a market order, which means if it goes through your price and it ends up 50 S&P points or 100 underneath it, you're going to get 50 or 100 underneath it, and your risk is going to be a heck of a lot different than when you got into the trade. So what do I like about this? I like identifiable risk. I like leverage, and I like the possibility, if you can catch the market, to make a decent amount of money. And when you're wrong, you're going to lose the premium max. So there you go. And then I also like to do longer term stuff. And longer term stuff is where, AppLovin drops down to 300 or something. I'm not going to buy a 1 month option in July. I'd rather buy a 6 month. And then when the stock goes to 600 or 700 bucks, I didn't have to worry about expiration. Same thing with Tesla. Tesla in August went down to like 300 bucks, right? Well, I don't want to buy necessarily a short-term option. How about one out till January? and you're locking in $300. Alibaba at 115 went up to 180. Oracle twice, 160 and 230. Stock went up to like 350. Broadcom 225. You know where it is now. Taiwan Semi, I just saw it was at $300 or something like that. So, when these then, Nvidia went up to like almost 200 now. So, and Constellation, come on. So when you see things that are very low, I like to, on the alert, give you an idea of, hey, how about going out in time a little bit, put up a little bit more money, but you might be able to make more. And like I say, people change the strike prices on this. They change the expiration dates. The ideas are the ideas, and what you end up doing or not doing is up to you. And so basically, though, it's nice to have somebody who's doing the homework to bring these ideas to the forefront. So at least you're aware of them because and I know between all the people out there with all the different things they're selling you, this, that, and the other, it can get overwhelming. And trying to keep track of all these things can be very overwhelming. So it's nice to have a more condensed information source. And that's what I try to do with the alert every Sunday night. Give you a condensed version of what's going on in the world. The Fed, the interest rates, the gold, the oil, the Bitcoin, what sectors are good or not good or whatever. And then, give you some ideas to chew on, both short term and longer term. And then the last kicker is again, all subscribers do get my cell phone. And so if you have a question, you can text me and go, "Hi, Jim, this is Bill. Could you call me on Wednesday at 4 p.m.?" I look at my thing. Sure, no problem. Yes, I'll talk to you then, Bill. And then if you have questions, we can cover those questions at that time. So it's very, very rare you get to talk to the guy who actually wrote the stuff up. And very rare you get to talk to somebody who can give you their opinions on trading options, that has traded so many options and tries to help you with your alternatives because it's not one thing you can do. If the market goes your way, there's a few things you can do to protect that gain and still stay with the market. If things are going against you, you could just sell and get rid of the position and move to new ones, which is what I tend to do. Or you can try to repair the trade. I know how to do all that kind of stuff. So, there are people charging thousands and thousands and thousands of dollars for this stuff, and God bless them. But we have a very fair situation, and I think on the screen there, you should be able to see, um, you know, how to get started. And to get started, I'll show you how it looks on the screen. Pretty simple. You fill out your information there, right? And then you've got two choices. You got the quarterly or you got the annual. Okay, both of them are being discounted $100 right now. So 397. I'll show you. If you click on it, you'll see it turns into 297 right there. Or if you do the yearly at 897, it turns into 997. It turns into 897. Obviously, the yearly deal is the best deal. It's if you break it down, it's much less than the quarterly, but a lot of people try to sometimes do the quarterly because they've been burned elsewhere. Or they're whatever they are. So you can try it quarterly for 297. But if you really want to, get serious, you get a course with this thing. You get an options course, which means as soon as you click complete purchase, in your inbox comes your receipt and comes a 6 hour, 3 session course. There's a link there. And you watch it like you'd watch a video. And again, it's a normally 397 if you buy that by itself, and it's included in your quarterly and in your annual. So you get that course, which many of you could certainly use. Then you get the ideas and you get the market summary every Sunday night. And then, of course, you have the ability to ask questions through texting me and then basically talking to me directly. So that is I mean, for 897 for the year, to be honest with you, I think that's a joke. It's a very low amount. And so you get, I think, much more than you're paying for. And then on the quarterly, of course, at 297, that's even but if you want to just try it again, you can always try that. But again, if you're serious and you have some money, obviously the yearly at 897 is the best deal. If you're a little tighter of funds and you're a little hesitant or whatever, you do the quarterly. And of course, my job will be to obviously make you happy so you can what? Can you could become a yearly? Now, again, you can't just stay in the dark and not read the alerts. You cannot just stay in the dark and never text me and ask me a question and think you're going to get way ahead. That just doesn't happen. I've been doing this long enough now to see what does happen with these things, and it's kind of like the gym membership. People sign up for the gym and then they don't go, or they sign up for the gym, they go once and then they never go back. So, you have to put a little bit of effort in here, and it's not too much, really. You got to read a report on Sunday night, and then you got to text me if you have a question, and then you're going to get a course. You have to watch the course. So, that's all we ask is try to, put a participation in there so you get the most out of it. That's the frustrating part on my end is when people put zero effort into it because they just sign up for everything and then they never look at anything. I don't like that. I don't want people to do that. I want people to get value out of this thing. So, and I want them to, you know what? People bring me their stuff. In other words, I got many, many, many subscribers, right? So they come to me and they go, Jim, this guy at this other place is saying to do this. What's your view on it? Or, well, I say that's a good idea, but my opinion is this strike would be better, and maybe buying more time wouldn't be a bad idea. Can you see that by going to a different strike and more time, that seems like more value? Oh, yeah, it does. So that's a thing that happens sometimes with subscribers is they'll check in with me. And again, if I think it's a great idea, because I don't know every idea, if I think it's a good idea, I'll do it. So the bottom line is that people come to me and we go through some of their other ideas as well. And sometimes most people feel very, very happy that they did it. So that's a lot of value there as well. Um, if you have any questions, you could throw some into the chat box if you'd like, and I could handle a few questions for you if you had any questions. If you know anybody else who and if you have any stocks you want me to look at, I'll go back on the other chart. It's not a problem. And we can look at some stocks. So you have any stocks you own right now? We can take a look at them right now. You can do a little bit of analyze your trade as well as option report. Let's see what you got. Okay, you got one here, Burlington Northern. I looked at it. I'll tell you, without looking at the stock, the reason I didn't do it was because the options are expensive, and I don't play expensive options. I'm in the business of buying cheap and selling fat, not buying fat and selling fatter. But let me show you Burlington. If you own the stock, it doesn't matter. You're not doing options. Okay, on Burlington Northern or Burlington stores, whatever they call it nowadays. I always look at the 20-year graph. 20-year graph tells me it's in a nice uptrend and it might want to go up there. Again, I love going into Christmas time. I gotta love Capri Holdings. I gotta love Ross Stores. I gotta love TJ Maxx because those guys, with all this wealth, people go out and spend a lot of money maybe at Christmas time. So again, even Target, the dog Target might get going. Anyway, let's go back to Burlington Northern. You are looking at, obviously it looks pretty good on the 20-year. This one here, it's had its reversion. You know what I like? That's what I like. And it looks like it's breaking out above red. I like it. So I guess I would say that if it takes out this number here, which is 283, when you see it print 283, I think it'll accelerate to the upside. If you start seeing it break down, particularly under blue, which comes in at 251, then you got trouble. Then you got trouble. So me personally, I'd wait for 283 and jump on a train that I know is going from to Boston from New York, because I don't want to jump on a train that's supposed to go to Boston. If it takes out blue, we're down there in Philly or down there in North Carolina. So again, that's what it looks like to me. 283, you're on your way. Because again, if you're buying options on it, you're going to have to take out 280 to make any real big money, right? So that would be one that I thought that's the way I think that looks. Again, if you have any other stocks, let's take a look at them here because it's an opportunity to look at them maybe through a different lens that might be helpful to you. Yeah, and again, Burlington had some problems here today. We'll have to see if that persists. Again, as long as it stays above 260 and 253, you're still in decent shape. Let's look at the 1 year. Yeah, you see same numbers, 260. Yeah, you don't want it under there. It is looking a little weak, and I don't like the blue line pointing down. That's why I said, when would I be interested in it? You blow out 283, I'd be very interested in it. But until then, a little dodgy. There's many stocks out there. You're not compelled to just do the one. Um, you want to look at some of these things that have earnings this week. And Netflix has got a good bid breaking out. Again, you consolidated and it's breaking out to the upside. This thing probably is going to have a very, very good earnings. Okay. And obviously, people are betting that way. And last week was a great time to buy. Great time to buy because they tried to get everybody out. Remember, I tell you, when they bring it underneath my lines, they're trying to get everybody out. And then if they do that and then they bring it above it, that's one of the most strong times to do something. Okay. So there you go. Another one is Tesla. And some board member doesn't like the $1 trillion contract with old Elon. So we'll have to see how that goes. But again, Tesla's time to act was when I put it on the list at 300. Can you see why? Because again, it had turned up at 300 and then it turned up at 320. And then this was really the last of the Mohegans. And then it's up, just had a reversion back down here. And now it looks like it's obviously breaking out again. And with the RSI coming out of this level here, if this thing breaks out 360, who's to know it's not at new highs by the end of the month? Okay, so be careful here because it is extended from the standpoint of from the 300 level, but it does look like momentum's turning up. The RSI looks like it's turning up. And if you look at a 5-year graph, again, but this is not where things interest me. They interest me when they're down in this area here. Up here, you should have done something. And if you haven't done something you should have done before, you probably don't want to do it. You might want to go look for something you should be doing. And that is when the prices are coming out of the chute, not after they're already on the chute. There's a lot of ways to trade. I'm just talking about the way I like to do things. And so those are two right there. And then next week, what do you got? You're going to have Microsoft because next week you got the Mag 7, right? So here you go. People are doing the same thing with Microsoft now, I'm sure. They're starting to bid it out. So watch Microsoft for a breakout to the upside. What else you got for next week? What about Google? There you go. Reversion to the mean, pick it up, breaking out, pick it up, and it looks like it could break out to the upside in a big way. This would be all part of a melt up if it happens. Amazon had a little problem today with AWS, didn't stop the stock. And again, this is another one that's very cheap right now because you see it's down on the gold line. Gold line is a good place to start looking. If it breaks the gold line here, not good. Not good. So it should have been the end of the story. Right here at 210, 215 should be the end of the story if it's going to get going. On a 5-year graph, again, holding on to the blue line. That's why I say if this thing breaks under 210, it can go down here pretty fast. But if it doesn't, then you're looking at the lows. And if it does get above 220 or 230, it's got real estate to go on. So Amazon looks like it could be setting up for a move to the upside, providing it doesn't take out the 210. What else you got over there? Apple, Microsoft. Apple, we already looked at, Google, and how about your buddy NVIDIA here? Again, coiling up, coiling up. If it gets above the red line here, which comes in at 185, that would be the time that it might be breaking out to the upside. So watch for 185. Today's high is 184 and it backed off. Can you see why it did that? I see on my stuff why it did. So again, keep an eye on 185. It could be a very key number. Looks like there's a little bit of a gap there too. And where's the gap? The low there was 186. So getting through 186 will open the door. And if it has great earnings when it comes out, it could really snap this thing. And I think that comes out before the end of the month. Let me just double check. No, it comes out next month, November 19th. So that gives you a little bit of idea of what's going on for next week, though. And it looks like an exciting next week. You saw that as a lot of these things look like they might be wanting to break out. So that'll be interesting. Um, Again, before I wrap up, if there's any other stocks you want me to take a look at, throw them up there. Be kind of crazy not to take a look if you could. And finally, again, the options alert service. It includes the course, which comes out to you today, or exactly when you hit complete purchase. It comes with your receipt at the same moment, which is instantaneous almost. So you can start studying right away. And then also you get the alerts every Sunday night. And then, of course, you get my cell number to text me if you have a question. So I try to put a deal together that's pretty good. Sounds pretty good to me. Um, VWAV. Yeah, that was in the news today too. I think I own this in my account. I'm not sure. Not on options. No, maybe not. Okay, so anyway, what is this doing? This is obviously, I think stock just must have come out because it doesn't look like it has much data. Yeah, it doesn't have much data. So let's look at the 1 month graph. We'll start a little shorter term. That thing turned up at around 940. It looks like all systems go. On the 1 year, again, it came back down to 9 and now it's back up. So again, as long as it stays above $10, again, it's extended here. So it's kind of rough. If you're a momentum guy and you think that things are just going to keep spiking up, that's your game, then this thing has momentum. And the RSI is at 69. So, if it goes into the 70s on RSI, for all we know, it could be going up to the 80s. We've had other stocks come out hot and then turn off a little bit. CoreWeave, came out hot, came back down. Now it's kind of matriculating to the upside, but losing a little steam. Another one was Circle. This one is another one. If it gets back above 140, it might be interesting to look at again. But it come out hot and come right back down. But some of these companies, they're not going anywhere, it doesn't look like. So they could be interesting to keep an eye on corrections. Some of the new guys, you know. And then a couple of them that were hot for a while. I'm trying to keep an eye on them. Is this guy here, Reddit, 280, come back down to 190. That's a discount, you know, might be on its way back up again. Keep an eye on Reddit because, when you can buy good stuff on discounts, it's not bad. But don't ever forget the charts when you're going to make a ton of money on stuff seems to look a lot more like this than they do like this. This is kind of like reversion back to the mean, maybe fill the gap. You know what I mean? This is what you're trying to find if you can. It's nice uptrending stuff that you're trying to either buy on a breakout after consolidation or taking a shot on a reversion to the mean. These are the ones, if you were going to put the top 10 out there, these are the top ones as far as probabilities in my view that you could see a nice move to the upside. So keep an eye on that as well. Anybody got anything else you want to look at real quick? Trying to think out loud if there was any other ones that I wanted to. Fortinet, cybersecurity, pretty big drop, huh? We had a strangle on the alert, 115 and an 87.50 right before it collapsed. So that worked out pretty good. And sometimes strangles are the way to go if you don't know which way it's going. And when you go sideways like this, that's when you don't know where it's going. So that's when a strangle can make some sense. And of course, when you get this volatility, you're very fortunate because that would make the strangle expand. But here we've had a drop, right? And now we've had a recovery. The lines are all above each other. Blue's rising. RSI is turning up. Would you be shocked if it went up and tried to fill that gap in the next 2 months? When's the earnings come out? Earnings are going to come out in November. So obviously you'd probably want to have your November 21st as the least expiration date. You want your expiration date to encompass the earnings, right? So that means 11/21, generally speaking. You could go to December because again, this could take time, but it does look like that's the way it would like to go. If you look at the 5-year graph, it came down and hit purple, so that reversion's over. And maybe this thing is improving here a little bit. So keep an eye on Fortinet. I see another one that come up here. Let me see what we got. MU and DocU. Yeah, well, I love MU, but not at these levels. I'll show you when I put it on the alert. I put it on the alert, MU and DocU. I put it on the alert when it was around this 110 thing here. You see, it had a big run up, and we were fortunate enough to catch a little of this ride. And then it had the thing where it goes underneath my blue line. You remember I say if you go underneath the trend line, I think they're just stealing the stock because they can't get the blue line to turn down because it's a longer term average. And then once it got back above it at 115, I thought that was a good sign to take a shot. We even put this on the longer term verticals. So I think the expiration might have been Christmas or something like that, around Christmas. And so that was a good run. Then it had a little bit of a reversion to the mean. So you had a chance at 180. and you had a chance at 160. Up here, you have to either be happy you got it or congratulate those who did. That's how I feel. The next one is DocuSign. That's why it's trading options. You're going to trade at the time where you think it's good, and hopefully it gives you something. You're going to take your money, and then you're going to go look for another setup that you think looks good. That's whether you're trading options or it's not working and you're going to take a loss. Okay, DocuSign. Well, RSI is at 32 here. Well, let's go all the way across. RSI down here was 31. RSI is 32, so that's pretty stable. And RSI down here was 36. A little bit of a diversion. That's not a negative. RSI is turning up. That doesn't look so bad. And let's look at it on a longer term basis. Hit the purple. That's generally the end of the line, right? And so you got RSI 43 there or 40 there. When RSI can't break under 40, that could very well mean it's the low, because under 40 is where you accelerate to the downside. So is this a good place to take a shot? Could be. And then on the 20-year graph, again, you're down on the blue. That's, obviously near a lower level. And so it does look like a good time to take interest here. And again, it's got plenty of resistance. So I don't know that it's going to go to 90 or ever fill that gap. But if it ever gets good news, that's where it would go. And isn't this a real estate deal a little bit too? Kind of like open door, meaning if real estate gets better, don't people because I remember I signed documents and I think it said DocuSign on it or something like that, right? So anyway, yeah, this could be another one that benefits from the real estate. And just to divert a little bit here, there's a few stocks that could benefit too. If this thing gets going a little bit. See, KB Homes, we liked it. It had a good job. Came back, had its reversion. So if it gets back above 64 here, plenty of room to fill in. Same thing with Pulte. Big move up, reversion to the mean. Is that correction over and get ready to go? If they start dropping rates a lot, maybe that'll help. And of course, the builder of cheap homes, DR Horton, again, loved it. Had a great time watching it go up. Had its reversion to the mean, and now it's trying to make a turn down here. So keep an eye on the home builders. They may have a future, and at least you're looking at them on a correction as opposed to chasing them and then losing your money. See, that's what happens when you chase things and then things change. That's how you can lose a lot of money. One other guy up here we had show up. Let's see. ADP and MO. Well, I liked MO. Let's see if I still like it. ADP also, they're now in the news because they're the ones who have the stats. Nobody else has any stats on them, right? But again, it doesn't look very good trend-wise here. This is kind of like, what's the positive thing I can say? The RSI here was 35, and then it made a new low, and the RSI is 32. There's not much I can say positive here. Let's see if on the 5-year can help me. Well, 270 is about as low as it should go, so I guess that's a positive. But the trends look kind of stinky. Okay, so yeah. Now again, on a long-term graph, that gives you some hope because that's a big uptrend. So again, that's a big uptrend long-term. And it is coming into the first support, which is the green. And that came in at 278 and it held. So that's a good sign. And then you've got the 180 part, you got the 260. So on a long-term graph, you could have something going here. I can see it. I know I'd cut it. I wouldn't want it under green or blue, that's for sure. Not one of my favorites, but maybe it's okay. Now, Philip Morris was looking pretty much like it was going to break out one way or the other. Let's take a look. Now, of course, it's in an uptrend already, but the 1 year looked interesting to me. Yeah. See, this thing looks like it wants to either dump down to 62 because this thing's rolling over, or on the 5-year graph, again, it's still in an uptrend. But can you see it could easily come down to 62 here and still be in a bull market? So as far as MO is concerned, it would need to get above 66 to get me interested, or come down towards these highs over here, which come in at around 61, 62, which is where the purple line is. Other than that, it's any man's guess. A couple of other ones that look pretty interesting as far as being on the verge, and one of them broke out to the upside. Yeah, look at this. You want to take a shot at something? What about ANET? And I put this on the alert this week, I think, or last week. So this one looks like it could be working pretty good. ANET. And then, of course, you've got eBay. And this one looked like a great strangle, and it was. See, they bringing it under here. They're seducing you, and then bam. And that's when the options are cheap. And that's when all these people who sold calls because they thought it was definitely going down are scrambling like cockroaches when the lights go on. And if this thing goes up further, they're going to scramble further. So again, this is where I think a seller of the call is making a mistake. And if he's making a big mistake, we'll see this thing go up to 105 or 110. If he's making a minor mistake, he's already done it. He's already done that because the options obviously have popped today alone. So those are two stocks I thought looked very interesting. One has already popped up, and it wouldn't surprise me if ANET would do the same thing. Well, we're coming to the top of the hour, and in case you haven't figured it out, I could go all day with this stuff because I love it. But what I am inviting you to do is to pony up either 279 or 897 and give me a shot and see if I can help you with your not only option trading, but I think you get the idea. I follow this stuff pretty well. And of all the things you've ever spent money on, I think this is a pretty worthwhile endeavor. So if you have any questions for me, my email is option, professor at gmail.com. And also, don't forget, when you do sign up for the Options Alert service, you get a 30-day free look at Stock Watch Weekly. And again, that's AI generated ideas. And a lot of people have been very happy with that. So I'm kind of excited to give you an opportunity to check it out for free when you join up with the Options Alert service. Okay. All right, guys. Any other questions before I sign off here? Let's see. Oh, looks like we got another one here. AMD. Oh, AMD and INTC. Okay, I got time for two more. INTC, well, I've had a lot of history with this one, so I'll let you know. There you go. Okay, here back in April, I thought, or actually, I think it was even here. I thought it was in an uptrend going to do good, but we looked at a strangle on it and it popped all the way down here. So the put went like from 50 cents to like $2 or $3. So it was crazy. But now, again, it turned up here because the tune between President Trump and the CEO went from he's a communist, has to go back to China, to he's a jolly good fellow. So they struck a deal with Intel, and that's what happens when Trump likes you and he gives you $10 billion, whatever he did. So Intel has been looking pretty good, but it is a little extended up here. If you look at it on a long-term basis, though, it is right up here. So if it can hang above the gold, which is 37 bucks, you can go up to the 55 and 60s on this thing. So again, very interesting here on Intel because if it can hold here and gets back under 37, wouldn't surprise me if it went back to 30. If it does there, it's on a way. It's going to accelerate, and the RSI looks like it's dying to accelerate. So very key area around 37 bucks on Intel. And again, that's not very far from where we are. So at least if you're fooling around with it, it's not very far from where you could be cautious on it. And the other one is AMD. Okay. Well, I think I looked at AMD, and again, like I said, this is the kind of deal where if you're in it, enjoy it. If you're not in it, congratulate the people who decided to buy when it turned up at 110, 120, or the ones who said it was only having a pullback when it reverted to 150, or saw it breaking out at 170. But for me to initiate something up here, although this thing could be going wherever it wants to go, it is in all-time highs though, right? So maybe it's just going to parabolically go. But this, in my view, would not be the greatest time in the world to just initiate positions in it because, again, a reversion to the mean pullback could happen. And again, don't forget that VIX. I'm leaving you with this thought. If this VIX can stay under 18 and 16, right? Then this market has a very good shot of melting to the upside. If turnaround Tuesday comes tomorrow and the VIX starts popping above 20 and 21, you see, if this is turnaround Tuesday and it can't get underneath this 18 and we get above 20 and then 21, then it's possible that the correction is still possible, even though it looks like the news is all one way right now. Earnings is coming out good. The cuts by the Fed, Trump and Xi are high-fiving each other. Boy, it looks awfully positive, right? But if the VIX starts getting above 20 and 21, and some of these things start cracking a little bit, then a correction is still not off the table. So be careful of that. And the inflation number on Friday of CPI, if it gives you a sticker shock, that could be something that's problematic. So we'll have to see if I was guessing what could possibly throw a little bit of a short-term wrench into what looks like a lovely market, it would probably be that CPI number on Friday, because we all know we all go out to eat, we all go out and buy stuff. We all know that the price of things seem to still be rising at a pretty good clip. Okay, guys. For you guys who signed up or are going to sign up, again, welcome aboard and thanks for doing it. Though you guys are a little bit concerned or whatever, we can talk. And other than that, like I say, any questions, you just shoot optionprofessor@gmail.com. And for the guys who are signing up today, don't forget your receipt includes the course. So you can get studying about options here tonight. And again, you'll get an alert, which has my text number. And you can text me and ask me questions. And we try to do the best we can to make you a better trader. Thanks for being with me. Again, this is Jim, the option professor. We'll be back again with more timing research information. So don't go away. And again, look forward to hearing from you. Have a great day, great week trading.